It's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about our weekly swing trading routine that I do every single Sunday to ensure I know exactly what's going on with the stocks that I'm holding and stocks that I think have some sort of potential. A lot of going into swing trading is just being prepared. It's not about, actively getting in and out of positions. It's actually just doing your homework and understanding what's going on with the stocks that you're looking at, breaking down your strategy, making sure you're continuing to follow your checklist and your approach. So guys, I hope you guys all enjoyed today's video. If you guys do, hit that like button, subscribe, and if you guys want to learn more about swing trading, check out our school. You guys can use code YouTube to get 20% off. So check it out down below. We have private live streams, we have quizzes, we have lectures, we have a group chat. But more importantly, this is not a get rich quick. It's not alerts or anything like that. We actually teach you proper techniques and proper strategies to become a full-time trader. So check it out down below. It's awesome. You won't regret it. And guys, let's jump into this here. So every single Sunday, I always want to make sure that I'm continuing to know everything going on with the stocks that I'm looking at. And actually, one thing that I do want to mention here going into this week is going to be election week. So we actually could see some volatility. But often, I did some research here on, how the general stock market gets affected by elections. And this is by T. Rowe Price here. And this is pretty much stating that the health of the U.S. economy is more important than what party gets into office. I think that's 100% true. Whether it's, Donald Trump or, Vice President Harris, I really think what comes down to the stock market is just the general health of the economy. And so if you guys think that right now is a very bullish time, we could see some buying pressure. If we see, a little sluggish stuff, then we'll see selling pressure. I think we'll just see general volatility. That's kind of expected just from the general market. We'll probably see some stocks like DJT, squeeze up if, President Trump, wins the election, and we'll possibly see some other stocks that, Vice President Harris kind of follows, those squeeze up in value. But overall, not going to be political. I just think it's something to take note of going into the week here. So let's kind of take a look at here some of our stocks that we are holding. So as of right now here, we do have 3 trades. So the thought process behind each one is actually very simple here. With the Costco trade here that I took, it's a risk and reward of about 2.6. So risking $1 to make $2.60. But more importantly here, it's using this 90-day moving average line as support in the past. So we decided to take a nice little trade here. The stock moved up a little bit. It also was trading for a 38 on the RSI, and it does have this really nice trend line, as you guys can see here. Let's go ahead and draw that out so you guys can see. So you guys will notice this nice little trend like such where it hits it, and we do have some good buying pressure on that line. So we do have a lot of indicators in our favor with this one. But more importantly here, Costco, in my opinion, carries a lot of long-term potential. So, I feel very comfortable holding this for a couple of months if need be. I'm just a huge Costco believer. I have a Costco membership, love the product, love the service. But let's talk about here another position. This one here is ticker symbol KFY. KFY here has seen a little bit of some volatility, a little bit of a break-even day here. But more importantly here, what do we notice, right? We notice that this stock here has seen a nice trend, as you guys can see, where it hits this general trend line on the hourly chart, getting good buying pressure. So we took a nice trade here where the stock hit this trend line and these moving average lines, keeping our stop loss a little bit below it to ensure a good risk and reward. So let's go ahead and draw that out so you guys can see. So we have our target price all the way up here at resistance. So in the range of, 76 to 73. So what I always will do is I'll kind of just draw a little box here, right? So we can kind of get a general idea of that there. So I do think we could see a nice little breakout here forming where the stock does squeeze up. The risk and reward as of right now is about a 5-to-1, which is pretty good. I do think we do have some key resistance levels that need to be broken. You guys will notice it does have just this general downward trend like such. So there still could be a move from like 70 to like $72, $73. We also took a trade on Apple here. Apple sold off, as you guys can see, this huge sell-off here due to the earnings. I often see this, with a lot of stocks here, that any action in the market is often an overreaction. So we decided to take a nice little trade on it, right on that 90-day moving average line where it's hit it as support and we've gotten good buying pressure. I have a very similar approach here with Apple that I do with Costco, is I can hold this for a minute. I feel very, very comfortable holding this stock. I'm not nervous. I understand Apple's not going anywhere anytime soon, and the risk and reward is relatively good as well. So after I go ahead and I review the stocks that I'm looking at, and I'm understanding, the earnings date and, all of that stuff here, I do think the next thing that I want to look at is going to be our watch list. We actually went through our scanner before and we added some positions, but I do think what's important is when you start breaking out your watch list is to actually like set alerts and stuff like that. So, for me, I love finding a stock here on an upward trend that has sold off down to some level of support. You guys can see where the stock actually popped up, on that 90-day moving average line. So this one here, the train has kind of already left the station almost, right? You can see it hit that 90-day moving average line. It's starting to rally its way up from highs. It's a 1-to-1 risk and reward. So for me, stuff like that, let's just delete it. I think it's a lot easier to delete, stocks that you're just not confident in, and that's exactly what I did there. So with FIP here, I do have a couple of approaches here with this stock here. We can actually draw out, it does look like it does have some decent support on a price. So you guys can see near and around that 780 mark, it does have good buying pressure. We'll move it up just a little bit because of those wicks. So you guys can see there could be a nice move from like $8 to almost $9. Basic support. We also do have some very basic resistance in that range. More importantly, looking at the hourly, you guys can see it still has sold off down below the moving average lines. So for me to be interested, we need some consolidation or we need some sort of trend breakout. Though that's kind of the two approaches I have with this one. So for me, really, there's no sense of setting alerts right now because I'm not even really that interested. This one here does look better. And the reason I say that is, with TGB here, you guys can see it hit that 200-day moving average line, established good buying pressure. So now the thought and approach that I would take with a trade like this is a trend breakout. So, I would actually just draw a general downward trend and set an alert above that trend line. So what this does here and what the strategy is with this one is if it does get buying pressure and pops up, then you can enter the trade, set your stops below it, and let this thing play out. Very similar to like even if you look back at something like this where it has seen some volatility, you can enter on this, set your stops below it for a rally its way up, right? If you draw it out, you can see stuff like that very, very often, right? So that's the approach I would take with this one. So just set an alert, being notified is crucial. With VRNS here, similar situation down below the moving average lines. So for me, if we entered at 51, we'd have to set our stops at like 58 for a push up to 60. Now, breaking down that risk and reward is actually relatively decent. It did get some sell-off because of that earnings. So it's about a 2-to-1 risk and reward. So we'll just move on. Something like that's decent. And so just being prepared, right? Going through your strategies, going through your approach, right? Old resistance, acting as new support. Could see a move from 17 to, like 25 to 30. Breaking down these trades are very, very, very crucial for becoming a successful trader. So you can see downward trend for me to be interested. Let's get on that breakout of the 90-day moving average line. Setting an alert so we're ready to rock and roll. This is what you guys should be doing every single Sunday as a swing trader, is just going in, looking at the positions that you're holding, looking at positions that have potential in your watch list to ensure you know everything going on with it. So guys, I hope you guys all enjoyed today's video. If you did, hit that like button, subscribe, and we'll see you guys in the next one. Take care.